In this video, I'm going to go through why house prices haven't crashed, despite Halifax and Nationwide declaring prices would drop 4% this year. Not just by sharing my opinion on this, but by actually walking you through the data that shows why prices haven't crashed, so that you can decide for yourself if you think the market's heading towards a crash or not. Because I think as we've all seen interest rates climb and climb, there's been this automatic assumption that if interest rates go up all the way from 0.1% to 5.25%, that's going to result in some sort of massive housing crash. And of course, that just hasn't happened, because in reality, it isn't just interest rates that affect house prices. I've broken this video down into 6 parts. So if you want, you can skip through different parts, but I'd recommend you watch the full thing to get the full picture. So those parts are: 1, what's the economic outlook? 2, how are UK house prices looking right now? 3, what's the demand from buyers right now? 4, what's the affordability of people's rent and mortgages right now? 5, what are the mortgage arrears, repossession rates from that? And finally, 6, what is the supply of properties coming to the market right now? And if you're wondering why you should bother listening to me, well, I've spent my career since 2012 founding and running a UK-wide home buying company, nationwide estate agency, and my own personal property portfolio. So not only does that give me access to information you probably don't have, but reading the market correctly is essential to mine and my clients' success. So let's get into it. What is the economic outlook right now? Well, right now, inflation is on its way down, which is good news, because it was high inflation that led to the Bank of England increasing interest rates so much. Although inflation is still higher than the blue line on the graph, that's the Bank of England's 2% target, most aren't expecting another increase in interest rates, because generally interest rate changes can take 6 to 9 months to fully bake their way through the economy fully. Which is why we've seen this pause in rate changes whilst the powers that be are basically watching to see the inflation figures keep falling from the effects of the previous interest rate changes. The other promising thing is that GDP has increased for a second month in a row. So although that yellow dotted line is still showing the trend is downwards, the most recent months are showing an upwards turn. However, there is still an increase in the number of companies, number of insolvencies, companies going bankrupt. So it really demonstrates that, although you may be sat there and coping just fine with the state of the economy as it is, there are victims out there, companies, people struggling. But how is that all affecting house prices? How are UK house prices looking right now? Amazingly, despite everything, house prices have stayed pretty stable. Yes, there are some slight increases and slight decreases. Yes, inflation has been high, but considering interest rates have increased 52.5 times from the 0.1% to the 5.25%, it's pretty incredible house prices have stayed as stable as they have. But I think what is also important to look at is the breakdown by country, because it's easy to look at average house prices across the UK, but in reality, England and Wales have seen bigger, clearer drops in prices in comparison to Scotland and Northern Ireland that have seen clear increases. And you can see this more generally as you break the data down by region. Some cities are performing really well, others aren't. So although these increases and decreases by area aren't drastic, it's worth taking note of them. However, what's the demand from buyers right now? In reality, it's the demand from buyers that are keeping prices stable. Something's worth what someone's willing to pay for it at the end of the day. And despite the massive increase in mortgage rates, estate agents are actually reporting a general increase in the number of buyers coming forward this year off the back of last year. Yes, they are still slightly shy on the previous periods over the last couple of years, but as you can see, not by much. So looking at this data so far, inflation dropping, GDP increasing, prices and buyer activity pretty static, it paints a pretty good picture of the housing market so far. But I think where the picture darkens a little is in the next section. What's the affordability of people's rent and mortgages right now? Clearly, the mortgage stats show a reduction in both gross advances and new mortgage commitments, which is a clear casualty of rising interest rates. In general, people just can't afford to borrow as much money, and that's demonstrated in these numbers. Also, people reporting it somewhat difficult to pay their rent or mortgage is still pretty high, although you can see that those rates have sort of been fluctuating below the yellow trend line over the last number of months. It is still quite a bit higher than where it was back in 2022, for instance. Looking at this, it starts to create a pretty clear predictor of what we'd expect to see in the next section. What are the mortgage arrears and repossession rates looking like right now? We can see as people report it harder and harder to keep up with mortgage payments, the level of mortgage arrears is increasing in tandem. But it's worth adding that despite this, the level of actual repossessions are only marginally increasing. The sharp increases in mortgage arrears hasn't yet displayed as a big increase in repossessions yet. And that's perhaps because the process to a lender repossessing a property from going to arrears can take 6 to 12 months. So it could well be the case that through the end of this year into next, we may start to see this really pick up. Although the increase in mortgage arrears obviously looks scary, it's worth pointing out that repossession rates are not even 10% the volumes they were in the last housing crash in 2007-2008. So relative to that, these numbers are still pretty low. But how is this all affecting the supply of property right now? What is the supply of properties coming to the market? Estate agents have been reporting the supply of property coming to the market has actually slightly decreased. So again, we're not talking about drastic decreases or increases, but no doubt, despite the toughness of interest rates, there is a resilience in the property market right now. And that is all being underpinned by a healthy demand for property that remains stable, and at least so far, no dramatic increases in the supply of property coming to the market that could swamp the market with supply, and that then could push prices downwards. I think the area of the market that has seen the biggest change has in fact been the percentage of properties that are selling below the asking price, a stat that a lot of people don't really look at. So it will be interesting to see how house prices fare over the coming months, when at the moment, as you can see, it seems such a big portion of properties are being sold at below the asking price. What do you think? I'll see you in the next video up here.